we actually started raising about 2 weeks after the tariff announcement, and all the institutional capital went to zero. But we knew we had something really special just based on the amount of customer traction that we were getting. And so we had to end up being very, very scrappy. And so we actually went back to a lot of our friends and family networks to actually get some of our first checks for about 50 to 100K that eventually led on to other friends and family kind of piling on afterwards. Hi, I'm Mark van Zee, the CEO of Saku Biosciences, and we help scale biomanufacturing. And we just helped close a round for 940,000.
Amazing. I'm really excited. And also Big Idea Ventures, I think, participate in that round, and they're massive leaders in the whole industry. So congratulations.
Yeah, thanks. And we were really excited that Big Idea Ventures actually closed the round and helped provide a lot of credibility. And we've really been pleased with how they've really helped us, not only with future rounds, but getting connected with corporates and making sure that we actually feel and look like a real company as well.
Amazing. So Mark, how did you guys raise your first check?
Yeah. And so we actually did mostly friends and family. To provide a little bit of context, we actually started raising about 2 weeks after the tariff announcement, and all the institutional capital went to zero. But we knew we had something really special just based on the amount of customer traction that we were getting. And so we had to end up being very, very scrappy. And so we actually went back to a lot of our friends and family networks to actually not only get some of our first checks for about 50 to 100K that eventually led on to other friends and family kind of piling on afterwards, getting really excited about what we were working on and really helping us out during a time where fundraising was really difficult.
Yeah, well, I actually love having this conversation with you because it's so many of our interviews, maybe a later stage rounds, and, speaking to somebody who just got their first checks is very exciting. And if you could just take us, how does a friends and family round come together?
Yeah.
Like if you take us back with, like, say, the list building, right? With VCs, I'm pretty clear. I basically look at, this is their pattern of investment over the last 12 months. This is their typical check size. I build a list of 100 names. I build my deck. I build my data room. I ask for a warm interest through a founder that they've invested in. And I just do that like 100 times. Like, what is this about? How does family and friends work? What has to be ready for friends and family? And how do you have the conversations with them?
Yeah. And so I think it's just probably one of the easier checks that you can potentially get. Usually what happens is that you do get this chain reaction that happens with a lot of friends. And so what happens when you talk to your friends initially is that there is some sort of skepticism and, resistance to potentially, putting money like as a check, right, to yourself. But as soon as you get that first one, then you do get this like weird pile on effect where it's like, oh, well, if my friend is putting money in, I'm going to put money in. And then that creates like this weird chain reaction. And so if you can kind of get that first check, either from a close family member, like a parent or a grandma who, has a lot of money or something like that. Usually you can just use that to leverage all the other friends to then start piling on and get that chain reaction effect. And I think people don't realize how much money you can actually raise from friends and family. I think for context, this was the first time I ever raised, and I thought I had a really small network of kids that were out of grad school. But if you can get some of them to just even get you like 5, 10K checks, you actually get this weird chain reaction and they all start talking to each other and you start getting more inbound and you can actually raise a lot more capital than I think people think.
Okay. So when I think about friends and family, I get a little worried, right? Because, gosh, I'm going to go to a family member, then I'm going to see them at, the family reunion, the bar mitzvah, I'm going to the Christmas party, and like grandma's looking at me like, hey, Mark, about that 50K, I let you, like, maybe I should get it back. It's like, well, grandma, that's like a 10-year wait, sweetie. Like, that's what the VC and the angel investment looks like. You're going to have to wait for 10 years. Like, but I really like the new false teeth, right? I probably would like that 50K from you now back. So they don't even understand what investment even means, right? So how do you, deal with that concern of, I'm going to ruin a relationship, right? Oh my gosh, what if I lose their money, right? And that's going to be every single party. Because I'm the guy who lost the family the money. Or do you see it different? Like, no, that's not how I see it at all.
I see it the opposite way. I find it really motivating because, as soon as you start putting a lot of friends and family money into this thing, like you basically, commit to the company in blood at that point, right? And you don't want to disappoint your friends and family like you've kind of mentioned. And now you feel like someone who can almost benefit your friends financially, right? Like now it's a little bit more of a opposite story. Hey, if this succeeds, not only do I bring myself up, but I bring up everyone of my friends around me who have known me for, 15, 20 years as well, right? So I see it as more of a motivating factor than an actual kind of nervousness associated with it. But I get a lot of founders who can feel that way. And I think if they kind of switch their mindset around it, I think it actually creates more commitment. It creates more energy around making it work because it ends up becoming an exciting things to talk about at Thanksgiving dinner and Christmas dinner and everything like that. If you can actually come back to them and say, hey, we closed these deals, we actually made these partnerships and we're moving things forward. And it becomes a really exciting thing that people could talk about.
Yeah. Okay. That's first of all, I really deeply appreciate that mindset. It is like the opposite of what I would feel, but that could be but I can realize that how that could be an issue because you want to share the most important things in your life with people who are closest to you, right? It's like, I want you very much to know what I'm doing and this is important. And I'm married, right? And my wife is very much partner in what I'm doing. I want her to know, she may not run a check, but she's by my side through the whole process. So you're saying, no, it's actually could be something that brings us closer together rather than pushes us further apart.
Yeah, exactly. And then I think we came from a world of people who have like invested in just in other industries before and understand the risk associated with it. So for context, a lot of it actually came from my co-founders, friends and family, and he came from a background in real estate where they naturally take on risk and invest in capital. A lot of my friends came from my days in e-commerce and in cryptocurrency, actually. And so they've known the mentality that comes along with investing, which really helped as well. And if we just kind of flipped it afterwards to just, hey, there's these exciting things that are going on in the company, it becomes a really fun topic to talk about often.
So this is a good one. So you felt like the ones you actually talk to understand that when you write an angel investment, it's going to sit for 10 years. It's not liquid. They
Yeah.
understood that, hey, there's no secondaries here, or at least very unlikely chance you'll have a secondary. You'll probably stay in its high risk. Did you clarify? Do you explain like the chances? Maybe I feel like I would have to tell them, hey, chances are you're going to lose all your money. Like, I hope you're okay with that. Is that part of the sales pitch or no, you can get your money and much more. It'll just take 10 years, but I'll get it back to you.
Yeah, no, I think it is important to very much clarify like the risks associated with what's going on. But what I've seen is what happens is that it establishes more trust. It feels like you are, not going to get over your skis. You're going to tell them when things go bad, when things go good, and everything like that. And so when we do engage with a lot of these friends and family investors, we do tell them, hey, this isn't like buying a stock, right? Where you can put money in, you can get your money out, whatever. This is going to sit here and, no matter how good or bad it's going, you're not going to be able to take it out until we have an exit event, essentially. And a lot of them understood it initially, and then some of them needed a little bit more explaining, but ultimately they ended up getting it. And being very clear up front actually helped us kind of close some of those good deals as well.
How do you help them understand just the opportunity? Like, do they
Right.
even understand? Because they're not going to understand the science, right? These are most
No.
like these are you're a PhD, like you dedicate like 10 years of your life to something like this. You're dealing with a very deep tech solution, like not simple even for another scientist to understand, right? This is cutting edge research. So how do you pitch the opportunity? Can you take us through why this is an exciting business opportunity? If I was a family member, could you take us through it of like, this is how I would convey what I'm doing to them? To you?
At the end of the day, really, when it comes to like angels and friends and family, it really just comes to selling the person. And so essentially we just sold me and John, right? John's been, successful at closing a lot of deals, a lot at fundraising. I came off to a lot of people as a very brilliant scientist who built this wonderful technology. And yeah, like they didn't really understand what was going on, but they just know that at these early stages, you're essentially investing in a person to eventually figure it out. And I think candidly, that's where I think a lot of investments should be at these early stages, because you're going to be pivoting so much at these early stages and it's not going to be this very clear path. I think one thing I've noticed that's happening with institutional capital is that they want a very, very clear path to get their money back or get to the next milestone when they put in that first check at the early stages. But for a little bit of context, me and John have built companies that made significant revenue before. And we know that those early stages are very messy. They're not focused at all. You're trying to test out what the market wants and doesn't want. And I think that's actually why we're getting more traction now than a lot of these other VC backed companies, is because we took a much more open approach during these early stages. And as an investor, like, you really need to invest in people who understand how to do that and trust that they're going to pivot and innovate in these early stages and eventually find the thing that's going to get them to, 100 to $1 billion.
Yeah, a founder I really love, Paul Shapiro of the Better Meat Co. He would always say that at this early stage, you're betting on the jockey, not the horse. I mean, you're betting on the rider, the team, and if you trust that, look, I just know that Mark is going to take my money seriously and he'll work the hell out of this situation and you'll figure it out, and that's what I'm betting on at this point, that this person will figure this out. I don't need to have a lot of, like a business plan and a PowerPoint presentation and a data room that's 20 pages long and, and all of the studies that back it, right? Was there anything that these people see? Just to put in the context, like, is there a deck? Is there, or is it most like one slide? Like, give $5,000 now, I give you $1 million 10 years later. Like, what? Just and sign here, please. This is the right information.
Yeah, no. So there's a deck where you do kind of outline it, and ultimately it comes down to, you present the deck, you explain kind of what we're doing. Typically, you do have some like lead up conversations, just kind of telling them like, hey, here's what we're thinking about. Are you potentially interested in this? Then you give like kind of like the actual pitch, and then here's like a formal version of what we're doing. Typically, they do their own diligence and research into it. Maybe they try to read some of the papers, they try to understand the industry, but ultimately, when you close the deal, it's really just a conversation, and there isn't a whole lot of diligence materials that go along with it.
And Mark, do you say, John, I would like to schedule a call you at 9:00 tomorrow for half an hour. I will present to you my vision. And at the end of that meeting, I will ask you for $10,000. Are you available? Is that literally how it goes?
No, it's a lot more conversational. I think that in the VC world, yeah, you do have like this like much more structured process. I think one thing I'd like to highlight is that my co-founder, John, has raised in other industries before. And what he taught me was that you need to be a lot more open and creative when you actually go about this. And you don't necessarily just start off with a pitch, right, asking for money. You kind of build up to it for like several months before you actually get into the actual pitch itself. And if you think about how it typically works in VC as well, right? Typically you meet your first VC at a networking event or over coffee and a lot of other things. And you talk to them for like a couple of years before you actually go into like a formal raise where you actually pitch them and ask them for money. And I think the same process happens for a lot of friends and family, where you don't just go straight into a pitch. You say, hey, just to let you know, we're starting this company. I'd love to talk about it. And you kind of have a conversation around that. And naturally, because they're your friend, they're kind of interested. Like, hey, what are you working on nowadays? And then over time, you then kind of pop the question. It's like, hey, you'd be interested in potentially putting money in. And then you go through the more formal process of, asking them for money, giving them a pitch, and then going from there as well.
This is. I can see a lot of founders struggling with this. What do you think makes it so difficult? I speak with founders raising every day, and they're all telling me the same thing. It's harder than ever to find investors who are actually deploying. And getting access to those leads takes time founders just don't have. Every month fundraising is a month burning runway. This is why we created FTW Plus, a community of founders actively fundraising. The world's most accurate agri-food tech investor database, plus connecting you directly to ideal target investors and a community of support and accountability. Guaranteed results or your money back. Apply today at www.joinftw.com/hub.
I think that particularly for people in food tech, they're very structured, right? Because it came out of academia. It's here's XYZ to go get a VC investor. You go to pitch events, you go to, you email a bunch of VCs, and then that's the only mechanism that you can fundraise.
Yeah. Or you have a grant, right? You have an application, it closes at this time, you supply it, and then you wait for the grant to either come in or not.
Yeah. And I came from academia, and the companies I built before were in e-commerce, and that was only composed of how do I develop these systems to get people to click a button. I never actually fundraised before. I never actually had to talk to people. And I really want to emphasize and appreciate my co-founder, John, because again, he came from a different industry, which was not obvious would translate to biotech. Again, he came from real estate where you don't go to like VC to raise. You try to raise from like these very unique funding sources. Sometimes it's government, sometimes it's the family office. And what he made me learn was that there's a lot more capital that's available to founders than is immediately obvious. Again, I can't specifically talk about certain institutions we got money from, but there were certain institutions that were not obvious that we can get money from. But if you got to know the right people in those organizations, like you can open up capital that oftentimes people don't realize is available to them actually. So, for example, there was an organization that actually did invest in companies, but it was very private, and you needed to know some of the higher ups before you can access some of that capital, right? And unfortunately, I can't say the name of it, but the way that kind of process worked is my co-founder said, "Hey, we should get to know some of the higher ups of the organizations because there is capital available and there is capital available that's not obvious or not promoted." And it wasn't until we started befriending everyone in that organization that they actually came to us and said, "Hey, we would like to invest if the possibility is open to that." And that took about a year of building up those relationships. And we were actually running out of capital towards the end of last year. And the 100K that actually came from that organization ended up saving the company. And it wasn't VC, it wasn't a friends and family. It was just like a interesting organization that it was not obvious that we can raise capital from.
Mark, I mean, what I think you're teaching me, and I think I struggle with, and maybe there are other founders, is that it's so like transactional. I feel like
Mhm.
raising money is very transactional. I come to you, I show you a pitch, you say, let's do due diligence, I sign an NDA, and that NDA translates into 3 more calls, and at the end of those 3 more calls, we go to IC, and IC says yes or no. Like it's a
Mhm.
very clear sales process, right? That is like it's a very transactional sales process that you know the rules of the game. And the way that you're talking about the raising money, the way that you're describing, it's like it's a very almost organic, fluid, long-term building relationships type of approach, more like dating almost, rather than this transactional approach.
Yeah, exactly. And again, taking a long term mentality. And one thing we actually do with a lot of investors now is actually try to find ways to help them. I think people don't realize that a lot of these funds, particularly in the food tech industry, are also just startups. They're also raising capital and trying to survive, and they're also struggling and going through all other things. And the way we actually maintain engage with a lot of investors who are honestly like too early for is say, hey, look, we know we're too early, but there are other ways that we can work together. There are, events that we can co-host together to drive deal flow. There are startups that I've gone to know over the years that I can refer you to. There could be media outlets that I've gone to know over the years that I can refer you to as well. And we actually work and help and with a lot of VCs who we know that are not going to actually give us capital later down the line. But what it ends up doing is again developing a relationship, getting us access to additional resources that I don't think people realize you can get from a lot of investors. I think a lot of people, particularly founders coming out of academia or some sort of science institution, is that they only look at investors as only providing capital. But I think they don't realize is that a lot of VCs also have these massive networks, and they could have portfolio companies who could be customers. They probably know a lot of corporates who can also be customers. They know a lot of people who can provide advice and a lot of these other things. And so I think approaching it as, hey, I'm going to develop a friendship and a relationship with this investor versus going straight into getting money ultimately gets more value out of them. And I think eventually leads to money down the line as well.
Yeah, absolutely. Last couple of questions. Again, this is such a fascinating and unique conversation. I think you have a real talent to you that so many other founders need to learn from. Like you have a real gift
Yeah.
that's been honed. Really appreciate your whole perspective on this. How do you understand how much to ask, right? Or you don't they give you the number. Like say, is it you're looking, okay, well, his net worth is $5 million and therefore he should be able to write me a $5,000 check. Or do you say, hey, this is where we're looking to fill. This is the opportunity that's available in terms of how much we still have left in this round that you can participate in, and they give you the number? Or do you recommend a number to them?
No, it's the latter, right? And so you say, hey, like we're looking to raise this much. The minimum is going to be, X dollars. And, if you can meet the minimum, happy to have you involved, right? Happy to have you part of the team. And if they, can't make the minimum, maybe we negotiate a little bit. But otherwise, it's the latter. You don't try to push on them like I want X number of dollars for you. We just say, hey, this is a really exciting opportunity. A lot of other people in the friend group has already invested. and you can kind of go from there.
Is this technically gonna go through an SPV, like, or are they gonna have, like, how do you structure it? Because I was involved in a company earlier that had so many people on the cap table, and each one of them had get permission for the follow-on round. It was disaster. It was really, really, really hard, especially in a safe, like very, very hard. So, is this an SPV?
We didn't do an SPV right now. I think candidly, we were just looking for speed at the particular point in time. But we do know that we probably will have to form an SPV in the future just to kind of consolidate a little bit. But we're not there yet.
And this was safe, correct?
Safe. Yep. Safe.
Perfect. Anything you want to share about the process of Big Idea Ventures? Because that's more of a traditional kind of first check, institutional, compared to that other process. Anything you've learned from going through a traditional check like that?
Yeah, and I think with Big Idea Ventures, I think for the audience, that was our last check, and we actually closed the round with Big Idea Ventures and kind of moved on into, okay, we're no longer in the friends and family stage anymore. We're in the institutional phase now. And the way that actually happened was we were actually struggling quite a bit with raising institutional capital. At the time. And I think a lot of it had to do with the fact that we weren't necessarily approaching how to close a lot of deals with institutions very well. In the past, what would happen is we would, talk to an associate, they would get really excited, and we talk to other technical diligence people, they would all get excited. And then we would talk to the partner, and then that's where the deal would fail. And what was interesting with Big Idea Ventures was we realized that the way you actually sell to get to the final decision maker and the partner is not actually how you sell to the partner itself. And so we were going through our process with Big Idea Ventures, and we knew we were eventually going to get to the partner of interest. And for context in the audience, when you talk to a lot of associates, they tend to come from an operational background. And if you have operated a company before, it becomes very easy to sell them. But the partner oftentimes is a finance guy or doesn't come from necessarily operational background or is looking more for like an emotional kind of reaction. And when we actually closed Andrew at the end of the tunnel, what I actually did was go on YouTube and just research all those other past podcasts. And what we did, we said, okay, like let's just find the podcast where someone directly asked him, what are you looking for in companies in an initial pitch? And all he said was, I'm looking for something that gives me goosebumps. And what me and John Den did is said, hey, how do we give this guy goosebumps in the first 5 minutes and we'll close the deal? And so he came up with this like crazy narrative about, my past and the vision of the company. And we knew if we can just tell a story that gives this guy goosebumps in the first 5 minutes, we would end up closing the deal. And because we knew he wasn't going to understand the tech, the business model was a mess and all these other things. But the fact that he just said, look, I'm looking for something that gives me goosebumps. How do we give this guy goosebumps? And we'll close the deal. And that's how we ended up closing Big Idea Ventures.
Mark, can you unpack to us how you gave him goosebumps? Like, what was the thing that you shared? Or at least if you open up a little bit of that door for us, because you clearly have an operational background before from building businesses in the past. So how you incorporated that or how you were able to convey the emotion?
Yeah. And I think to talk about my background a little bit, I've actually, again, built successful e-commerce companies that made millions of dollars, right, off baseball jerseys. And so we started off that. But what we got him to kind of get interested in was that the fact that I've actually been thinking about biotech and biomanufacturing since I was basically 14 years old. I would actually essentially ride my bike to the local college courses. I grew up in Claremont and I'm actually seeking those classes and I would learn philosophy, physics, biology, and all these other things. And what I said was I realized that in our lifetime, biotech was going to have its moment where it wasn't just going to be limited to just high value medicines, but it was going to revolutionize the entire physical materials altogether in food and chemicals and all these other things. And telling a really good story around that and saying and convincing him that this is the larger vision that I have, not only for our company, but for the biotech rich large, I think is what kind of convinced him to get really excited about me, regardless if he understood the tech or understood the business or anything like that. Because as I kind of mentioned, in these early stages, you have to invest in a founder and just believe that they're going to figure it out at the end of the day. Alex, you muted.
Beautiful. This has really been a masterclass for me. I think I know I'm going to do things differently because of this conversation. I've been in this already for a little while and have learned a lot from you. Just, I always end up the same way, which is, is there some way that you want to give to the community of our founders, investors, the type of conversations you like to have? So if I'm listening to this podcast, I say, hey, Mark, I'd reach out to you and say, hey, you mentioned X, Y, and Z. I'm that guy. I'd love to have that conversation with you and learn from you.
Okay. No, I think just generally, I'm happy to help out any other founders, right? I think we took this mentality at the beginning of Saku that like we were not going to like try to extract from the industry, right? Like we want to help out other people in any way possible, right? Whether that's forming connection, whether that's providing advice. And I've actually helped and talked to a lot of founders who are actually competing against us and I'm actually friends with because at the end of the day, like I think this industry is just struggling overall and no one knows the answer about how to build a real scalable company in this industry. I think there's a lot of this debate, for example, around, platform versus single asset and things like that. But you can look at pure platforms like Ginkgo and you see failure and you can see pure, product like Amorous and they ended up failing as well. And I think just having the industry and the community just realize that no one's really figured out how to build a scalable company in this industry yet. And I think to your point, creating these mechanisms like Food Tech Weekly to actually get people to combine ideas and figure this out, I think is going to be very valuable because I think once everyone cracks the code on how to build a really VC backable company, that's when I think we're going to get a wave of capital that gets reinjected into the industry, a wave of innovation, and a wave of impact that I don't think people are seeing nowadays.
Yeah, absolutely. Absolutely. And we saw that the waves that we came from these big exits in 2019, right? We absolutely are going to have those in the next, little while. And flow back into the ecosystem, but we're rebuilding to understand which models actually work after the highs and the lows of what we've experienced the last 6 years. And in terms of what you personally need over the next, say, 12 months, 8 months, what kind of support do you need from the community now? What are kind of conversations you want to have? What's critical for you guys at this moment, commercially or from an investment standpoint?
No, I think it's just, again, people who are working in this industry just reach out and love to have a conversation and get to know them and love just to bounce ideas around, how we can all work together to build a business model that I think actually scales and can be replicated amongst a lot of different companies. And so we can actually just grow this industry and have the impact that I think we all want to have.
Amazing. And for you guys as business customers, what kind of customers are you looking for over the next 6 to 9 months?
Right. So more corporates. I think I can't get into the details, but we're getting into deep conversations with a lot of corporate entities. And the ultimate business model is going to be, twofold. One, we can either help improve their already internal fermentation processes, or if you're like a large corporation who makes animal or plant-derived proteins, for example, our goal is to eventually just sell products that can replace it that are made via fermentation. I think a lot of founders don't realize that a lot of these corporates do have a huge appetite to actually switching to fermentation. It's just the problem of how do we hit cost parity? Once you hit cost parity, a lot of people want to switch over from these traditional processes that damage the environment, that have these price fluctuations and get disrupted by geopolitical pressures. There is a huge demand there. And I think people need to realize that there is money on the table, unlike what a lot of people think. It's just we need to solve the underlying infrastructure issues to actually, again, get to these price points that can get adoption and really start making viable companies in this industry.
Amazing, Mark. Thank you for this conversation.
Yeah, likewise.
One more thing. Don't close this episode yet. If you got value from this conversation, here's what I need from you. A 5-star rating, 1 comment, 20 seconds of your time. That's the deal. A 5-star rating means more founders find this content, and every time a founder raises, all boats are elevated. Every week, I pick one random comment and send that person a complimentary copy of Investment Climate, the book. 50 sales playbooks from founders who actually raise money during the fundraising winter. Real strategies, real closes, real numbers, not theory. So if you want a copy, comment below, and if you haven't followed the show yet, do that too. And if there's a guest you want us to bring on the show, just drop us a note or send us an email. We'll read each and every one. Until then, keep on raising.